I could go on with this list of stocks that fell today, but I would have run out of time. I would have not run out of ideas or the list of stocks. It was an exceptionally bad day for the retail investors. While Nifty may be down 1.5%, Bank Nifty 2%, but the real fall was in the broader market. See next 50, 3.2%. I'm not even measuring the small caps right now, and retail has less of Nifty, more of next 50 stocks, and a lot of small caps. And I can assure you the patterns repeat. Most retail today would be terrified, no one would have dared to buy. ITC fall was mostly the demerger. This fall out of the 8%, probably 5 or 6% was the entity that went out. Then there were three falls: HDFC Bank, SBI, and Kotak Mahindra. And I have a theory on why banks are looking specifically bad. I'll talk about that in the Nugget section. It was not hard to find green stocks at all today because there were only 4 green stocks in Nifty. Forget ITC today. The biggest fall as usual was from Reliance. Then there were banks: HDFC, SBI, Kotak. The virus scare took Apollo Hospital right at the top. Only one green stock in next 50. Deep red in 80% of the stocks. Only Godrej Consumer in the green. The biggest fall came from LIC India, IRFC, Adani Green, Adani Power, Indigo. And I mentioned this on Friday. Crude is up a bit, so IOC has started falling. Not a single sector up. All 36 in red. See here, just a tail. The heavyweights right at the bottom. Some of these sectors fell by nearly 5%. One thing to note today was the falls today were on high volumes. The panic was probably because all the channels were only carrying one news, that too not verified by the government, about the new virus. I personally feel that there should be some curb from the government on the fear mongering induced today. It caused several lakh crores of damage in the stock market. Bank Nifty looks terrible, that too on high volumes. The news that floats around today on credit growth lowering down, that's wrongly spelt. It sounds like credit has gone down. People are not taking loans. The news, if you go in through the details, says that from the rate of about 14 to 15%, this credit growth has slowed down to about 10%. The credit growth is still 10% plus, it is not minus. See this distance to 52-week high. It already reflects the sentiment that banks are not having a great time. This is not anything new. Yes Bank hit a new 52-week low. Bandhan Bank hit a new 52-week low. Fantastic volumes on a bad day, which means people rushing out. And then we say we have strong retail, and then we say we have long-term investors. If the country is going to grow in long term, how will it grow without the banks? No place to hide at all in the PSU space either. Big cuts, specifically in Union Bank, rocket volumes. Look at the distance to 52-week highs and the distance to 52-week lows. Suddenly the PSU space is looking terrible, the banking PSUs. And these banks just came out a year back from a slumber of 4-5 years of NPA cleanup. Big cuts in the investment bank space today, and the stocks that were not moving at all, they fell most. JM Financial, Motilal Oswal, and Angel One. The NBFC space has been rocking for last week or so, and that was hammered a lot today. Deep cuts, 3, 4, 5% kinds. Now it may sound comical, but IT looked probably the best sector today, and it is a defensive sector in times like today. And what was down also, these are not service companies, most of them are platforms. No place to hide at all in auto. Auto ancillary was worse, the cuts were deeper. Defense was red today, but I am expecting this sector to go up anytime now. Specifically the shipping companies Mazgaon Dock, Cochin Shipyard and GRSC. I personally expect that the budget will still be good for the defense sector. Metals in general have been sulking only. Today was no exception. Everything down in the oil and gas space. HPCL was singled out today. It is high beta stock. No place to hide in the power sector. The power demand is not going down. The rates are not going down. Coal India is at the boundary of making a new low. This is the largest coal producer in the world. Renewable power Each and every stock was down 4 to 5%. Pharma may look red today, but that's because there was a lot of profit on the table. If there is a virus around, pharma stocks, especially the diagnostics ones, they will go up. I'll have to create a virus impact dashboard now, perhaps. Consumption could be a safe place to hide in general going forward. This sector has already fallen a lot. I don't think there is much scope in stocks like, say, Nestle, Britannia, Dabur, and so on. And some of them may be beneficiaries of the virus. For example, Dabur, because of the Ayurveda quotient. Non-edible space has been recovering for last 1 week, and there was some profit on the table that got taken out today. Alcohol and tobacco, if the times get bad, this sector will have higher sales. That's the irony. This budget, no one wants railway stocks at all. No point talking about business groups. Tata Group was all red. Only Titan was up a bit along with Tata Consumer. No place to hide in Adani Group either. And European really ugly. Big cuts, especially in energy, next 50 and auto. And while IT companies have been going up, Infosys says that we will not give hikes for another quarter. Their founder says work 70 hours. That is how they decide to make money. Rupee is sliding very fast. Adani Group says that they will grow at least 10% this year. And Center has said there are 2 cases of the virus. We are a country of 145 crore people. Nifty VIX climbed a bit today, in fact 15%. Can you guess which day VIX went to 31.71? Election results, 4th of June. Gold and silver are inching up. Silver is now above 90 yet again. Bitcoin is at a stone's throw from 1 lakh yet again. The party is on 20th of January. Crude is now going towards 77. And on Friday, the US markets were looking good. And let's see where Tesla is on 20th January. Department of Government Efficiency. The term in crypto market right now is DOGE, Doge. My trades for the day, I bought a lot, but not a single stock. I bought silver ETF and I bought several bonds, fixed income. I'm moving a bit of money away from equity to bonds. In any case, my bond portfolio is a lot bigger than equity. And as bonds mature, these are short-term bonds, they will transfer to equity over time. Banks in India are a little different from global banks. They rely primarily on current account, saving account. This is together called CASA, and FD. RD is as good as FD. These are the sources of money mostly for most banks. Securitization is there in India, but it is not as mature as it is in Western countries. Take it with a pinch of salt. Securitization, if not done right, can lead to 2008 Lehman Brothers crisis. Using this money, banks give loans. Loans could be of various types. They could be vehicle loans, personal loans, home loans, consumer loans. Current account is at 0, saving account is at 3%, FDs are typically at 7%. So actual CASA is somewhere around 5% cost to banks. They give loans, say home loan at 9.5%, 10%, vehicle loans are at 12%, personal loans are at say 18%. There is a difference between these two values. This is bank's gross profit, out of which a significant part is of course the operations part. A part of these deposits, obviously as per RBI's mandate, has to be kept secure in case a lot of people ask for their money back. Now when people take loans, they have to give it back as EMIs. That contains a bit of principal, a bit of interest. Principal is added to this particular pool. The interest goes to the balance sheet of the bank as profit. That is after reducing the operational cost. If someone defaults on paying these principal and interest, after 90 days of non-payment, they are classified as NPAs. That is the broad way a bank works. Now banks have several other ways also. Banks sell other products. For example, they sell insurance, they sell lockers, they sell mutual funds. So there is a fee income on top of what they do from the core business. Typically the idea is that the staff cost is going to be the same, and let the especially RMs do a bit of cross-selling, upselling, sell these products to their customers. Now there is another category in which banks are involved, that's investment banking. HDFC has HDFC AMC, that's a subsidiary. ICICI has a subsidiary, ICICI Securities, which is trying to delist. Axis also has Axis Securities, which is not listed directly. Now if you see, there are a lot of low cost providers like say Zerodha, Grow. They are coming and taking share from banks. Now if you talk about investments of people, there are AMCs like Motilal Oswal, Nippon AMC, 361, Novama Wealth, Angel One, JM Financial. These are not part of banks. In India, the HNIs typically go to these companies. I'll tell you the reason for that. HDFC typically or ICICI typically, they designate their RMs to sell, say, insurance, mutual funds, etc. They have a pre-packaged sales pitch. They don't customize it to customers. HNIs don't like it. These guys won't innovate. These guys will not treat HNIs as HNIs. Spam calls. That is why banks lose the business of HNIs significantly and they do lot lesser than they could. I have closed my account with at least 2 banks just because my RM was horrible. Now there's one more flavor of finance in India. It is called non-banking financial companies, NBFCs. This takes away a lion's chunk of money away from banks, that too which has higher interest. For example, Bajaj Finance, 4.5 lakh crores. Similarly, transport finance company Shriram Finance, that's 1 lakh crores. PFC, REC, these are PSUs, but they are not banks, they are NBFCs. Now, one more thing which is happening is some of them, including government NBFCs, they are doing QIPs. They are raising money from outside. Earlier, they used to take this money from banks typically or do bonds from investors. You might have seen on my channel also, so many companies came up with QIPs in the last 2 quarters. Why? Because dollar denominated loans are very cheap. All this money is not being now loaned out by banks. Even gold loan companies, Muthoot Finance, Manappuram Finance, IFL, look at their market caps. No one goes to banks to take gold loans. There is one more flavor which is called microfinance, and now banks have started acquiring microfinance. Now these companies are standalone companies, but IndusInd owns Bharat Financial. This is the company I used to work for some time back. RBL has RBL Finserv, which was Swadhar some time back. Similarly, HDFC has HDB, which HDFC is trying to list right now. This particular industry is under high stress right now because of defaults from people. Mostly a side effect of elections. It's a cyclical activity, happens every 4 to 5 years. This sector has everything red, and the banks which have exposure to this particular sector directly, they are down a lot. Now the problems which are there specifically for banks right now, and most of them, first of all, at economy level, we are in a denial phase. We say we don't have a problem in India. Finance Ministry says everything is fine, tax collection is growing, RBI says everything is fine, we do have some speed bumps at times, everything will get fine. There is no action being taken to fix anything because there is nothing wrong. There is a full form of HMPV going around, high mere portfolio ki value. This is denial. Retail has a problem, but there is no problem in the economy. The focus of two key departments, Finance Ministry is focusing on tax, RBI is focusing on inflation. Interest rates are not going down for a specific reason in India. Even at this interest rate, people are not going to banks. Most people are preferring equities. Some people are also preferring bonds. No one wants FDs these days. If you lower the interest rate, what will you do? If interest rates are high, cost of lending is of course higher than that, but this spread cannot be very high. If interest rates get lowered a bit, say 2 notches, this will go down 1 notch or 1.5 notch only. The spread goes up. Banks would prefer interest rate to be lower. Demand for credit, auto, we all saw what happened last quarter. December was a bit of an aberration. Home section is next. Personal loans, there was data published today only that it has gone down. No one is taking credit card loans. Only for discounts people are taking credit cards, not for credit. This business is not making sense for Indian banks at all right now. In fact, most banks have started withdrawing benefits and increasing charges right now. This is source of a lot of revenue internationally. Indian banks are not able to make money here. Also, UPI started the trend, IMPS, RTGS, NEFT, everything is free. This is cost to banks to conduct this business, but the consumer cannot be charged. Banks have tried to charge for some cases. People just do UPI. They will do checks. In India, even if you put 25 rupee fee on RTGS, people will not want to do that. They will avoid it. The cost of doing business is only going up. If overall the business is not doing well, the cost will continue to grow only. It is very hard to bring down the cost of operations for bank unless the balance sheet grows at a rate faster than the growth in cost. NPAs, by the way, do you know you are the one who sponsored cleaning up this entire act? I don't know the size, but there will be default, especially at micro level, and microfinance is already showing that particular trend. These problems are systematic. We need jobs. We need growth. The salaries need to grow in line with the inflation, the real inflation. First, we have to accept the real inflation. Otherwise, this problem will only increase and it will reflect in NPAs eventually. You will see the P's correct significantly for many banks which are not doing well, which have given loans without much solicitation. And this problem is here to stay. It won't get cleared mainly because of the first point. Hope this information was useful. This is only for educational purpose. Don't take investment decisions. Don't start selling banking tomorrow. Thanks for watching and I will see you tomorrow.